Hey, welcome to the 40 Finance channel, everybody. My name's Jeff Beers. Today we're going to be talking about beating inflation and beating the S&P 500 for the rest of the year. And while there's a lot of bearish sentiment in the market right now, the fact remains that you still have 8 months to beat the rate of inflation with your investments, and you still have 8 months to beat the S&P 500. And I'm going to show you a really easy way to think about this goal that might surprise you. As we're going through this video today, you're going to see a lot of screenshots here from SeekingAlpha Premium. My affiliate link is in the description below if you're interested in learning more and saving a substantial amount of money on a 1-year subscription. Okay, so let's kick things off with the S&P 500. Just for the sake of argument, I'm just going to use the SPY as our example, which is an S&P 500 ETF. And here we are on the year-to-date screen. Okay, so if you bought this on January 1st or maybe January 3rd, whatever the first trading day of the year was, you are down 7.59%. Now, that price on January 3rd was $477. Put that in perspective, and we're at $441 today. Okay, so a very simple way to think about the goal here, which is to beat the S&P 500 heading into December 31st or whatever the last day of trading is. You actually have the advantage in the race right now. The S&P 500 is down minus 7.64%. So if you think about that, no matter what stock you buy today, at least at the time of purchase, you're at zero, right? You haven't made or lost anything, and your friend who's holding the S&P 500 since January 3rd is still down minus 7.6%. So right off the bat, by buying today, and we don't know what the future holds, but by buying today, you have the lead. Now, let's think about that through the end of the year. And let's just say that by the end of the year, the S&P finishes the year flat, right? So 0% gain or loss. It literally lands at $477.71, which is where it closed on January 3rd. So funny enough, in terms of results for the full year of 2022, if you bought the S&P 500 today, from where you stand today, the S&P would actually be going up 7.6% or so. So at the end of the year, when they're handing out invisible awards for who beat the S&P 500, your friend who bought on Jan 3 is going to be flat at 0, and you are going to be up 7.6% in the example we just went through. Now, as simple and perhaps silly as all this sounds, this is a trick that analysts use all the time. So the guys that are on the TV and they're saying they are plus 20% for the year, whatever, it's all about the actual day that they purchased and the actual day that they sold. So when you're watching some of this and you know that we're having a screwball year in terms of where we started, where we are now, no one exactly knows where we'll end, but it is indeed factually accurate that if you purchased today and the S&P went back to par for the year, you would be up 7%, and you could advertise your stock service or your newsletter or whatever you're doing. All right, now let's talk about inflation. So we just had an inflation report. I'm on this website. U.S. inflation calculator is one of the first things I found in Google. We'll just assume that they're the Bible on the topic here. And 8.5% is what our CPI number was that was released approximately last week or so. So as of today, you need to make more than 8.5% on your investment just to keep your dollars worth the same amount as they were worth last year. So when we're looking for investments, we need to find investments that are at least 8.5%, and it probably, since we're investing, right, we want to make more money than that. So suffice to say, you're going to need to identify investments that are in that 10 to 15% range. Interest rates right now are nowhere near 8% or 10%, 15%, that's not even a discussion. So anything that is a bond or a savings account, or even dividend stocks for that matter, at least the dividend portion, nobody's paying in the 10% range across those objects, right? So we need to identify stocks or securities that can give us 10+% as of today. All right, the first place we'll stop at here is the one that I'm putting most of my resources into, and that is the QQQ. If you subscribe to the channel, you also know that I own some of the TQQQ, which is the triple leverage version. But let's just look at QQQ for where that sits today. So starting price on Jan 3 was 401. Year to date, you're down basically 15%. But let's talk about this in terms of beating inflation. Just think about this for a second. Right, so the target is 10 to 15% that we're looking for as of today to beat inflation. That's the goal in this one. So we want to beat inflation. And let's just say that the Qs don't quite come back to the 401 mark, right? A lot of stuff has changed, and even if we have a second half of the year that's good, we don't know, perhaps over the next month or so, the Qs could go down even more with all the influencing factors that are going on. But just for the sake of entertainment here, I'm going to say that they get to 10% from here, okay? 10% from here to beat inflation. So 10% of 341 is about $34, right? So we need to get to 375 on the Qs from here today. On a down day of minus 1.38%, we need to get to $375 by December in order to beat the current rate of inflation. Now, I, for one, believe QQQ is an easy one to beat inflation from here and hit that 10 to 15% mark. But just eyeballing a lot of stocks that are held inside the Qs, I see a bunch that certainly have the potential to go an easy plus 10% from here as more and more earnings reports come out. Then we talked about if the S&P were to get back to flat, that's actually a lower expectation than inflation. That was only like 7.5%. But I think there are dozens and dozens of high-quality, large-cap stocks that can easily get to the plus 10 to 15% mark from here through the end of the year. And I've done some price targets in the past, but just to highlight a few names, I would never discount Apple or Microsoft from going 10% more from here through December. I certainly would never bet against that. But I think Google, Amazon, Facebook, AMD, Adobe, Qualcomm, Netflix, even though it keeps getting hit hard with some negative headlines, and PayPal, for Christ's sakes, at like 104 right now. Can that go 10 or 15% from here? I don't think it's a whole lot to ask. And if you wanted to get down to just sheer who has the lowest forward PE from this point, you're going to see a lot of chips. Qualcomm, Comcast, Intel, Cisco. That's a chip sector, so it's a little bit different game. But if we throw Facebook at a forward PE under 20, Google at 22, PayPal at 22, AMD at 24, and then we talk about price to sales and go lowest price to sales. I mean, heck, you got Costco right around 1, even though it's a retail store. T-Mobile's right in there at a 2, Intel at 2, Amazon 3 times sales, PayPal under 5, Facebook under 5, Netflix at 5. I just think that there's a lot of things you can go through in the tech sector, and you only need to pick one, right? 1 or 2 at the most, maybe just to diversify a little bit. If the S&P was plus 10% by the end of this year, I would be pretty surprised because that'd be a 17 to 20% turnaround from where it is today. But I hope it happens. I really do, because I'm in the Qs and it'd be nothing but good news for there. And speaking of the Qs, if they're down minus 15% today, you know, for them to eke out a plus 10% for the full year, they'd have to swing plus 25%. Okay, that's a lot on those type of index plays, right? But you as an individual have an opportunity right now, depending on what you believe in, right? Right here before Easter, you have an opportunity, and I would imagine certainly after Easter and through earnings seasons, there are going to be some bumps in the earnings season, absolutely for sure. But you have an opportunity to get in when some, if not a large percentage of bad news is priced in already, and you can look like a genius at the end of the year. If the S&P goes to flat, or let's just say it's a 1%er, just by buying today, you'll have added 7, 8, 9% to that number just for being in at a different time. All right, guys, so this is just a different way to think about things like, can I beat the S&P 500 in 2022? Can I beat inflation? Make sure that inflation does not erode my dollars in 2022. And at least from where I sit, while there's a lot of discussion about secure investments and not losing your money, I think that there's a lot of opportunity at this particular price point. And if it goes down much further, then the hypothesis would only grow from there, that you can actually beat the big forces in the room simply by buying when the bad news is priced in. All right, let me know what you think about this thought process on beating S&P and inflation. As always, please give the video a thumbs up. And before you go, don't forget to check out that Seeking Alpha special offer in the description. Thank you to everybody for your support. We'll see you on the next video.